Welcome to the Financial Frontier, where we discuss the best investment opportunities. Today, we delve into the top 3 stocks to invest in 2025 during the tariff dilemma: Walmart, WMT, Johnson & Johnson, J&J, and Coca-Cola, KO. In this ever-evolving world of trade, tariffs have become a significant factor influencing global markets and investment decisions. As these economic tremors ripple across continents, certain companies stand out, demonstrating resilience and adaptability. Our focus today is on Walmart, Johnson & Johnson, and Coca-Cola, 3 formidable entities that have consistently shown their mettle amidst economic flux. We'll explore their strengths, weaknesses, opportunities, and threats, helping you make informed decisions about your investments in the face of the looming tariff dilemma. So fasten your seatbelts, keep your eyes on the horizon, and your hands on your portfolios. So gear up as we embark on this insightful journey. Hey there, viewers! If you're loving the content you're watching right now, don't miss out on all the upcoming videos packed with fresh tips, tricks, and inspiration. Hit that subscribe button so you can stay updated and be the first to know when we post new content. And don't forget to leave a comment and share with your friends. First on our list is Walmart, the multinational retail corporation. When we talk about strengths, Walmart is a powerhouse. Its vast retail network is unparalleled, boasting over 11,000 stores across 27 countries. This extensive physical presence gives it a unique competitive advantage, enabling it to reach consumers in every corner of the globe. Moreover, Walmart's strong online presence cannot be overlooked. The company has been steadily beefing up its e-commerce platform, embracing technology to meet changing consumer demands. Its online sales have been growing at a double-digit pace, and it's showing no signs of slowing down. But let's not forget about Walmart's impressive supply chain management. This behemoth has mastered the art of inventory management, ensuring that products are readily available to shoppers when they need them. This strength not only enhances customer satisfaction but also contributes significantly to the company's bottom line. However, every rose has its thorns, and Walmart is no exception. One of its key weaknesses is its heavy reliance on the U.S. market. Despite its international presence, a significant portion of its revenue still comes from its home turf. This dependence exposes Walmart to economic fluctuations and policy changes in the U.S., potentially affecting its profitability. Walmart's cost leadership strategy also has its drawbacks. While it allows the company to offer goods at competitive prices, it also puts pressure on profit margins. This becomes particularly challenging during economic downturns or periods of increased competition. Lastly, Walmart's size and scale, though a strength in many respects, can also be a weakness. The company's vast operations make it difficult to maintain consistent quality across all stores and online platforms. This can lead to customer dissatisfaction and, subsequently, a loss of market share. Despite these weaknesses, Walmart's strengths position it as a strong contender in the 2025 market. Its expansive retail network, growing online presence, and efficient supply chain management are all factors that may help it weather the tariff dilemma and emerge as a promising investment option. Now that we've covered Walmart's strengths and weaknesses, let's talk about its opportunities and threats. A key opportunity for Walmart lies in its digital expansion. As more consumers shift to online shopping, Walmart has been quick to adapt, transforming its digital platform to accommodate this change. The company has also been investing in advanced technologies like artificial intelligence and machine learning to enhance the customer experience. This digital pivot presents a significant growth opportunity, especially as e-commerce continues to thrive. Another area of opportunity is the emerging markets. Walmart has been gradually expanding its presence in high-growth economies, particularly in Asia and Africa. These markets present a vast consumer base that is increasingly embracing the convenience of modern retail. By tapping into these markets, Walmart can significantly bolster its growth prospects. Moving on to threats, increased competition is a major concern. The retail industry is highly competitive, with players constantly innovating and offering new value propositions to attract customers. Giants like Amazon and Alibaba present formidable competition to Walmart, both in domestic and international markets. Another threat comes from potential tariff impacts. With the ongoing tariff dilemmas, Walmart could face increased costs for imported goods. This could squeeze the company's margins and potentially force it to raise prices, which could, in turn, affect its competitive position. Furthermore, the evolving consumer preferences towards more sustainable and ethically sourced products pose a challenge. Walmart, with its vast supply chain, needs to ensure it meets these changing demands to remain relevant and appealing to today's conscious consumers. Lastly, the uncertainty of the global economic climate also poses a potential threat. Factors such as inflation, currency fluctuations, and changes in government regulations can all impact Walmart's operations and profitability. In conclusion, while Walmart faces some significant challenges, it also has substantial opportunities to leverage. Its digital expansion and growth in emerging markets can help offset the threats of increased competition and potential tariff impacts. These factors make Walmart a stock to watch in the face of the tariff dilemma. Next up is Johnson & Johnson, a multinational medical devices, pharmaceutical, and consumer packaged goods manufacturing company. This behemoth of the healthcare industry is renowned for its diverse product portfolio, which spans across three major sectors: consumer healthcare, medical devices, and pharmaceuticals. This variety provides a robust safety net, as poor performance in one area can be offset by growth in another. Moreover, Johnson & Johnson's commitment to research and development is truly remarkable. They are continually innovating and creating new products, which not only provides a stream of fresh offerings to consumers, but also keeps them at the forefront of the medical and healthcare industries. This relentless drive for innovation is a fundamental strength that propels the company forward. However, it's not all sunshine and rainbows for Johnson & Johnson. The company has faced significant legal challenges over the years. These legal battles, often centered around product safety and allegations of misleading marketing, can be costly, both financially and in terms of their reputation. It's a weakness that has the potential to impact the company's bottom line and investor confidence. Additionally, product recalls have been a thorn in Johnson & Johnson's side. Time and again, they've had to pull products off the shelves due to safety concerns. This not only leads to financial losses, but also erodes consumer trust in the brand. It's a weakness that Johnson & Johnson needs to address to maintain its stronghold in the market. In conclusion, Johnson & Johnson is a company of contrasts. On one hand, you have a company with a diverse product portfolio and a strong commitment to research and development. On the other hand, you have a company that's had to grapple with legal issues and product recalls. These factors, both good and bad, play a crucial role in J&J's position in the 2025 investment landscape. Now let's dive into the opportunities and threats facing Johnson & Johnson. As we delve into the world of healthcare, one of the key opportunities for Johnson & Johnson is the growing global healthcare market. With the world's population aging and the demand for healthcare services on the rise, this presents a significant opportunity for the company to expand its reach and influence. It's not just about physical health, but mental health and wellness too. The potential for new product development in these areas is vast. Another area of interest for Johnson & Johnson is the potential for growth in emerging markets. As economies develop and access to healthcare improves, there is a rising demand for quality healthcare products and services, a demand that Johnson & Johnson is well positioned to meet. Let's not forget about the company's robust research and development capabilities. Johnson & Johnson's commitment to innovation is evident in their significant investments in research and development, which could lead to the discovery of new drugs, treatments, and healthcare solutions. However, like any other company, Johnson & Johnson also faces threats. One of the significant threats is the regulatory pressures in the healthcare industry. Changes in healthcare laws and regulations can affect the company's operations and profitability. Another threat is the patent cliff. The expiration of patents for some of the company's top-selling drugs can lead to increased competition from generic drugs. This competition can lead to a decrease in sales and revenue for Johnson & Johnson. Lastly, the company is also susceptible to lawsuits and legal actions. As a manufacturer of medical devices and pharmaceutical products, Johnson & Johnson needs to ensure the safety and effectiveness of its products. Any missteps in this area can lead to legal actions, which can adversely affect the company's reputation and bottom line. These elements paint a comprehensive picture of J&J's potential in 2025. The opportunities are immense, but so are the threats. As investors, we need to weigh these factors carefully before making any investment decisions. Johnson & Johnson's future will be shaped by how well it can capitalize on these opportunities while navigating the potential threats. Finally, we have Coca-Cola, the world-renowned beverage company. A titan in its industry, Coca-Cola boasts several strengths that solidify its position in the market, making it a potential favorite for investors in 2025. One of Coca-Cola's most significant strengths is its incredibly robust brand. It's not just a name, it's a symbol recognized in virtually every corner of the globe. This powerful brand recognition allows Coca-Cola to maintain a strong customer base and command premium prices for its products. Another strength worth noting is Coca-Cola's extensive distribution network. From bustling cities to remote corners of the world, you'd be hard-pressed to find a place where Coca-Cola isn't available. This vast reach ensures that Coca-Cola products are always within the consumer's grasp, which translates to consistent revenue streams. However, it's essential to balance this glowing picture with a look at Coca-Cola's weaknesses. Perhaps the most prominent concern surrounds health issues. In an increasingly health-conscious world, Coca-Cola's flagship product, its sugary carbonated drink, has come under scrutiny. This growing awareness about the negative health impacts of sugary drinks may impact the company's sales and reputation. Tied to this is Coca-Cola's heavy dependence on its carbonated beverages. While the company has diversified its product portfolio to some extent, carbonated drinks still make up a significant portion of its sales. This narrow focus may limit the company's potential for growth, especially in markets that are shifting towards healthier beverage options. In conclusion, Coca-Cola's position in the 2025 investment landscape is a tale of two halves. Its powerful brand and far-reaching distribution network are potent strengths, but they must contend with the weaknesses of health concerns and a heavy reliance on carbonated drinks. As potential investors, it's crucial to weigh these strengths and weaknesses when considering Coca-Cola. Coca-Cola's strengths and weaknesses are key to understanding its position in the 2025 investment landscape. Let's now explore the opportunities and threats that lie ahead for Coca-Cola. Starting with opportunities, Coca-Cola, as a global titan in the beverage industry, has a fantastic chance to diversify its portfolio. With people all around the world drinking over 1.9 billion servings of the company's beverages daily, Coca-Cola has the potential to introduce new products in response to changing consumer demands. Think about it. If even a fraction of these consumers tried a new, healthier drink option, it could mean a significant boost to the company's revenue. Another significant opportunity lies in emerging markets. These markets, such as those in Africa and Asia, are ripe with potential. With rising middle classes and a growing appetite for Western brands, Coca-Cola can tap into these markets to drive growth and profitability in the coming years. However, it's not all smooth sailing. Changing consumer preferences pose a significant threat to Coca-Cola. As more and more consumers become health-conscious, demand for sugary drinks is on the decline. Coca-Cola will need to adapt to these changes and innovate to stay ahead of the curve. Moreover, potential tariff implications could also pose a threat to Coca-Cola. In an era of increasing trade tensions and tariff dilemmas, the cost of doing business internationally could rise for the company. This could impact Coca-Cola's bottom line, especially given its extensive global operations. In the end, the future of Coca-Cola lies in how it navigates these opportunities and threats. The company's ability to diversify its product offerings and penetrate emerging markets could provide significant growth potential. At the same time, its response to changing consumer preferences and potential tariff implications will be critical in maintaining its profitability. These factors could be pivotal in shaping Coca-Cola's investment potential in 2025. There you have it, a detailed analysis of Walmart, Johnson & Johnson, and Coca-Cola amid the 2025 tariff dilemma. We've embarked on a comprehensive journey, dissecting the strengths, weaknesses, opportunities, and threats each of these corporate giants faces. Through it all, one thing is clear: the future of investing is not a straightforward path, but these three stocks stand out as potential stalwarts amid the economic turbulence. Let's recap. Walmart, a retail behemoth, has shown a knack for adapting to market changes and leveraging its massive network to maintain a competitive edge. Despite facing some challenges, the company's ability to pivot and innovate makes it a compelling consideration for investors looking towards 2025. Next, we've explored Johnson & Johnson, a healthcare and consumer goods titan. Known for its diverse product portfolio and robust research and development capabilities, the company's potential to weather the tariff dilemma and continue delivering solid returns is noteworthy. The healthcare sector's resilience, especially during challenging economic times, further strengthens Johnson & Johnson's position. Finally, we've delved into Coca-Cola, the global beverage leader. Despite the ever-changing consumer preferences, Coca-Cola's brand strength, extensive distribution network, and commitment to innovation position it well for future growth. The company's robust financial health and ability to generate consistent cash flow are key indicators of its potential in 2025. These three stocks, Walmart, Johnson & Johnson, and Coca-Cola, each present unique opportunities for investors. They represent different sectors, giving you a chance to diversify your portfolio and spread your risk. While the tariff dilemma may bring uncertainty, it also brings opportunities. Companies that can adapt, innovate, and weather the storm are likely to emerge stronger, making them compelling investment choices. Remember, investing is not about chasing the next big thing. It's about understanding the market, the companies, and their potential for long-term growth. So, as you consider your investment strategy for 2025, remember these three stocks and the value they could bring to your portfolio. Remember, investing is a journey. Make sure to subscribe, like, and share our content to stay updated on the latest investment opportunities. Until next time, happy investing.